Hello everyone. Well, we are approaching another month closing with good news for commodities as all metals from precious to industrial staged a good recovery and are set for a monthly gain. However, crude oil has continued to fall after last month's recovery. US dollar was sold once again and US Treasury yields corrected. Focus for the month was on data prints from US Fed's future stance as well as COVID situation in China. I'm Ravindra Rao from Kotak Securities, Commodities Research Desk, and I welcome you all to this fresh edition of Commodities Weekly Audiocast. Let's understand how commodities performed in the previous week and what will be the major focus in the upcoming week. Commodities traded mixed last week with the precious metals trading flat to positive, whereas industrial metals and oil fell. Trading was with thin volumes amid a holiday shortened week due to US Thanksgiving Day, a long weekend holiday. Focus was on Fed and China COVID situation. Although there was no indication of reopening of lockdown from China, some relief came in the form of RRR cut late in the week. It was expected that PBOC might cut the reserve requirements at the start of the week, but they did it on Friday, lending some support. The Chinese central bank reduced the reserve requirement ratio by 0.25% at the end of the week. The minutes of the FOMC November meeting was released on 23rd November. The minutes indicated majority of the policymakers were with the view of slower rate hikes as a recent Fed's aggressive stance is impacting the economic growth. Dollar index fell by more than 1% after the release of the minutes. Although the minutes indicated the end of jumbo rate hikes, the policymakers were uncertain on when will be the end point to the rate hikes. Smaller rate hikes by Fed are positive for risk assets as well as for safe haven assets like gold as dollar weakness supports. The US dollar retraced towards 108 earlier in the week. However, after the FOMC minutes release, it fell and closed the week at 105.96, a fall by almost 0.90% on a weekly basis. Focus for the week will be on important US economic data prints, including Q3 GDP, ISM Manufacturing PMI, and all important monthly jobs report, that is NFP. Weakening data points will be negative for dollar index as this will cement Fed's slightly dovish stance in their upcoming meetings. However, having said that, Fed Chair Powell's speech in the midweek will be closely tracked by traders. Additionally, China COVID situation will continue to drive the markets. Last week, dollar index retraced close to 108 and fell. We had mentioned in our last week's audiocast that selling might be seen from the resistance of 107.50. This happened as dollar index closed near 106 after falling to as low as 105.63 in the previous week. For the week, the range would continue to be 108 to 104.90. Sustained break below 104.90 on daily closing might pull it further lower towards 103.30, a strong 252-day moving average support. Coming to energy specifics, precious metals traded flat to positive amid range bound US dollar that initially rose but later fell on back of FOMC minutes. COMEX gold February contract fell by 0.01%. It was almost flat and closed at around $1768.80 per ounce, whereas COMEX silver contract closed at $21.61 per ounce, up by 1.95%. SPDR gold ETF holdings and iShares silver ETF holdings saw modest inflows in the previous week, hinting towards some improvement in investment demand. Focus for the week will be on US data prints like Q3 GDP, ISM Manufacturing PMI, and non-farm payrolls report. Weakening data pointers might support precious metals to continue to move up on back of weakening American currency. Fed Chair Powell's speech will also be looked at if his language seems more dovish after weaker than expected recent data prints, along with cooling inflation. On the price front, as expected, COMEX gold Feb contract held the support near $17.40 and has stabilized around $17.50. We still maintain a bullish stance in gold as the bulls might target $1805, 1808 level, which is the 252-day moving average resistance in February gold. Immediate resistance near $1789. Above that, we might see prices going higher. On the MCX, gold for February delivery recovered from a low of 52,400, which has now become the support. As it closed below the last week's high near 53,265, as it closed near to the high, now 53,265 would become the resistance for the week. A break and close above previous week's high of 53,265 might take it towards the recent high towards 52,700. In case of COMEX silver, a March contract, price has once again moved closer to the 252-day resistance, moving average resistance near $22. A break above the said resistance on a sustained basis might push it further higher towards $22.50 followed by $23. Support for the week would be near $21.15, whereas on the MCX silver contract for March delivery is still trading above 252-day moving average support of 61,950. Until that holds on closing, the bias remains positive with immediate objective near recent high of 64,500. Coming to energies, oil witnessed wild swings in the previous week as WTI crude oil slipped to $75.08 per barrel, lowest since January. It fell to the lowest earlier in the week after report that Saudi is considering an output increase of 0.5 million barrels per day in their upcoming OPEC Plus meeting, on December 4th. However, Saudi denied it which helped crude to recover all the losses. The respite was short-lived as EU discussed a higher than expected Russian oil price cap at around $65.70 per barrel. This led to bets that Russian supplies may continue even if the plan is executed. This eased any immediate concerns of global supply tightness, setting prices for a 4.78% decline in the third consecutive weekly loss. Besides, a decline in oil stocks could not cushion prices as both products, gasoline and distillates, reported inventory buildups. Focus will now shift on to December 4th OPEC Plus meeting as Saudi Energy Minister had already indicated that they might intervene if required and take further steps by reducing production to maintain the demand-supply balance. On the price front, WTI NYMEX December contract crude oil closed near the double bottom support of $75. A break below $75 on sustained closing basis might pull it further lower towards $73 per barrel, followed by $68. On the MCX, support would be seen near recent lows of 6,200, which is the hammer candlestick pattern support. Break below might pull the prices towards 6,100 followed by 5,900. Until that is held, a consolidation between 6,200 to 6,600 is possible. Finally, in case of base metals, majority of the metals closed lower in the range of 1 to 3% last week as worsening COVID situation and fresh curbs has hurt demand outlook despite a weaker dollar. However, liquidity injection by Chinese central bank in the form of RRR cut by 0.25% at the end of the previous week might support the metals in the week. Copper may also see some support from lingering tensions at BHP's Escondida copper mine in Chile, as one of the main unions rejected a company's proposal and said it will stage strikes on November 28th and November 30th, unless BHP agrees to improve safety conditions, including involving unions in the inspections. On the price front, MCX copper has witnessed throwback after December contract tested a high near 711. Price has now reached the earlier breakout levels that might be supportive for price. 52-day moving average is near 662, which would act as a support. Having said that, until 662 holds on daily closing, a bounce back or a second leg of rally can't be ruled out. Apart from copper, other base metals like zinc and aluminium are expected to trade in a broad range. Well, this brings us to the end of this week's commodity audiocast. Keep a watch on important drivers of the week in the form of US Q3 GDP, ISM Manufacturing PMI, the important NFP report, and Fed Chair Powell's speech. Might be a little volatile this week also on back of the important data points. So trade safe and all the best.